UNH is about to report earnings on July 29th, and this is what I'll be looking out for. Do you think UNH will beat or miss earnings? Today, I want to talk you guys through firstly, UNH's Q2 analyst expectations. Secondly, why the stock was down 5% again last week. Thirdly, what I've been listening for on the earnings call tomorrow. A quick look at CNC and their recent earnings. And finally, whether I'm buying or selling pre and post earnings. Welcome back to the Value Investor Show. Thank you so much for your support over the last few weeks. Shout out to the viewer who donated a coffee last week. If you want to donate, be sure to include your X username so that I can shout you out. If it's marked private, I won't be able to see it. I put hours researching and working on these videos for you guys for free, so any support means a lot and goes a long way. You can donate using the link in the description and also follow me on X, Value Invest Show, for daily updates. So UNH second quarter is one of the most important calls for the company over the last decade, and this week will be the most anticipated this season. We have a huge earnings week. SoFi, Visa, Meta, CVS Health, UNH, Apple, Amazon, ExxonMobil, and many more companies across every industry is reporting this week. This means we'll get a solid read of how the broader economy is doing amongst all the tariff uncertainty, regulatory uncertainty, and everything in between. UNH announced that their earnings call will be 45 minutes earlier than usual, starting at 8 o'clock. Some think it's because they're preparing to announce disastrous results and need extra time to explain. My opinion is that Helmsley wants time to explain how they're taking steps to address the issues, and he also wants to gain back investor confidence. So I don't necessarily think that moving the call back to earlier in order to extend the Q&A is a bad thing. I do think that extending the Q&A also gives analysts more space to ask tougher questions and get back some confidence that they have lost over the last few months. Before jumping into 2025 Q2 expectations, let's look at past Q2 results. In the second quarter of 2024, revenue grew 6% year over year to 99 billion, but cost pressures hurt margins. Diluted EPS dropped from $5.8 to $4.5 due to challenges like the V28 implementations, for example. For 2025, revenue is projected to jump 12% to 111.5 billion, which does indicate that membership growth will continue to be strong, but EPS expectations are to worsen. In fact, analysts have noted that sentiment has deteriorated significantly due to a series of unfavorable events. The top-rated analysts lowered their estimates and they lowered their price targets as they remain cautiously optimistic about the stock heading into the second quarter. Zacks Investment Research also published a bearish piece warning that operational and regulatory headwinds are destroying the stock appeal. Our estimate for total medical costs indicate a nearly 15% year-over-year increase, while we expect operating expenses to have increased by almost 14%. Further, we expect the cost of products sold to have jumped more than 10% year-over-year in the second quarter. Ongoing operational and regulatory headwinds have eroded United Health's investment appeal, which is why they have put it as a sell rating given their cautious stance and urge investors to consider exiting their position. That could be very accurate. If UNH misses estimates, we might even see more downward pressure on the stock and even more lost in investor confidence. So last week, UNH fell 5% again on Thursday after disclosing a regulatory filing that is under DOJ investigation. They proactively launched a third-party review of their coding, risk assessment, managed services, care practices, and pharmacy services. We already knew this investigation was happening, so the market reaction felt overdone. My opinion is that this announcement was essentially UNH leadership trying to get ahead of the issue and move forward. They no longer want to be associated with the DOJ investigation, which is hurting not only the company's stock and performance, but it's also hurting investor confidence. I think their primary target is to get it over with fast and effectively and focus on the operational excellence, on focusing on improving margins. It's also worth noting that last week on July 22nd, someone bought 250,000 shares at the 285 price, which essentially means a 71 million trade. Clearly, a fund is deploying capital into UNH, and that's the kind of institutional support we want to see. It suggests a bigger vote of confidence in the leadership, in the company's future, and it begs the questions: are funds now finally a bit more optimistic about the future of healthcare and UNH? But regardless of whether they beat or miss estimates, I'll be listening closely to the earnings call tomorrow. And there are three things that I want to hear from UNH leadership, again, regardless of the results. The first one is I want to hear how UNH reprices its Medicare Advantage book next year, how they're taking steps to reprice their Medicare Advantage book, and how they're going to mitigate the problems they have in the pricing strategy. The second thing I want to hear about is any cost savings and AI implementation throughout the business that are implemented in order to drive operational excellence, in order to reduce pressure on margins. And thirdly, I want to hear whether memberships are growing, so whether revenues are growing. Is UNH well positioned to gain more market share in the health insurance industry? So in a nutshell, the two things I want to hear about is firstly, revenue growth, regardless of whether they beat estimates. And secondly, is how they plan to improve margins over the next 1-2 years. Because the truth is, margins are not going to be great this quarter. They're not going to be great this year. But we want to see better margins moving forward. And that's why I have invested in this company. A lot of you asked me to review CNC. CNC posted their Q2 earnings last Friday. And I think it's important to compare them to UNH and understand why CNC underperformed. Well, their underperformance come mainly due to their exposure. For example, UNH has one of the least exposures to the ACA subsidy cliff dive at the end of this year and Medicaid work requirement frameworks. So that's the two green colors over here. In comparison, Centene is hugely exposed from Medicaid and ACA subsidies, which essentially is roughly 80% of its medical memberships from ACA and Medicaid, compared to less than 20% for United Health Group. So that positions CNC much more exposed to regulatory uncertainty versus UNH. Now, in terms of the Q2 results for CNC, they were really rough. The CEO admitted that they were disappointed with the second quarter results, but they have a clear understanding of the trends that have impacted their performance and are working with urgency and focus to restore their earnings trajectory. Their medical costs appear to have driven the quarterly loss, as the company health benefits reached 93%, up from 88% in the year period before, and even higher than the consensus estimates. So as you guys see, the results were even worse than what was expected, not only in terms of revenue, but also in terms of EPS growth. But on top of that, CNC also lowered their 2025 year-end guidance, and this was the first time that they missed earnings over the last 4 years. So going back to UNH, I run my own numbers for a base case where I account for major hits in 2025 in terms of an EPS and free cash flow perspective. And even with this conservative inputs, I have also applied a 10% discount rate and 50% margin of safety. Now, in terms of revenue, EPS, and free cash flow growth estimates, I have used lower than the 10-year historical averages. And also, again, this is beyond 2025, so this goes from here to here. And given my margin of safety, the average intrinsic value with margin of safety is $225. So that's a difference of 20% from the current price. And my 2030 price target is $600 to $700. And given the fact that this is a company that pays 3% dividend plus buyback shares, the long-term story does remain intact under this base case. I also posted a poll on my YouTube channel, and 77% of you believe that UNH will beat estimates. Tomorrow, am I buying or am I selling? Well, my expectation is that UNH UNH will double beat estimates because the new CEO has taken steps to lower expectation to the maximum he could. He also suspended 2025 guidance, and I think that gave him a very low bar to work through. In case the stock doesn't perform and in case the stock drops further to maybe $250 to $260, I'll be likely buying more. With that being said, I do expect terrible results overall, but I do think the new management will be honest with what the problems are and how they're working to address those problems. I still believe in healthcare. I believe in the new management, and I think this isn't the first time in history that UNH is facing problems. In fact, history suggests that they will be able to overcome these problems that they're facing now, and they will come back stronger than ever. Thank you for watching, and I'll see you tomorrow for a deep dive on the actual earnings results. Do not forget to subscribe, and let's see what tomorrow brings.